Hey everyone, on this Trade to Black podcast, we talk about the big vote related to the cannabis industry taking place later this week, with many believing the bill's not even going to pass, yet cannabis stocks have been ripping over the past week. We also learned from this multi-state operating executive that we will see some sort of legislation reform taking place later this year. What exactly is it and when will it happen? Find out now on our latest podcast. Hey everyone, welcome to the Trade to Black podcast. I am your host, Shad Dales. Before we get into the podcast, as usual, all views on the Trade to Black podcast and the guests on this podcast are purely opinion. You should not treat any opinions expressed by us or our guests as investment advice. The views on this podcast are solely intended to be informational and are not investment advice. Joining me, as usual, lead financial writer, Benjamin A. Smith. It's midweek. How are you?
Doing well, Shad. I kind of like this midweek thing. We should do it more often.
We should, and the reason why is because the man in the middle that's joining us this week is the Executive Vice President of Investor Relations from Jushi Holdings. Michael Perlman joins us. Michael, great to have you on. How are things?
Doing well. Thank you for having me. I really appreciate it. Always look forward to being on with you guys and continuing to tell a story, which we think we have a great story to tell.
Yeah, it's good. And nice to see stocks ripping in this industry once again. It almost feels like, wow, I forgot what this felt like. It's been such a long time, but nice to see the performance for the overall sector over the past 7 days, don't you think?
Yeah, it is great to see. Like I said, I think you need to take it with a grain of salt in terms of the headlines. Unfortunately, the fundamentals are in driving the space. It's all headline driven at this point. So, of course, we among the other MSOs have taken it on the chin as of this past year. So, it's very attractive valuations across the entire sector at this point in time. Love to see some movement on the federal side.
Wouldn't we all?
My breath. Yeah. I'm not going to hold my breath to see if anything gets done. I think we're probably a month or two away from actually seeing some serious conversations on passable legislation. So we look forward to that. But in the interim, once again, momentum breeds momentum. Love to see it. Love to see the support. We'll keep on watching the headlines to see how they ultimately how they play out.
So you believe in the next month or two we could see some movement with regards to legislation. What makes you believe that?
Well, I think we're going to have to start with the COA bill, the Schumer's bill, and see where that ultimately plays out. He's indicated that he expects to launch the revised discussion bill that was presented back in 2021, based on the conversations that he's had. It's going to be interesting what's included in that, and then ultimately the thought process is that it's something to work off of. And then ultimately potentially work with the other senators, whether it be, Perlmutter, who's made it his mission to get safe banking in some form pushed through. But I think what's going to take is some compromise between these two bills ultimately, where it's going to be some sort of safe banking plus social equity components that's actually passable, because I think we don't have the votes for a full-blown kitchen sink type of legislation at this point in time.
Yeah.
It's unfortunate, but we just don't have the votes in the GOP. And so that's the same problem we're going to run into with the MORE Act. It's just we don't have the votes in the GOP when it goes to the Senate floor. So we need to have some sort of passable legislation. We know that safe banking has bipartisan support. However, Democrats absolutely are fully focused on the social equity component, the ridding the wrongs of the past, which I agree with, but we're going to have to take steps to that over time.
Yeah.
And I think, safe banking plus social equity expungement may be that bill that both sides can get behind. So I think after Schumer puts that forward in April, and then folks have time to digest it, to understand where they're at, then real conversations can happen at that point in time.
Well, you mentioned MORE Act. It's a big vote coming up later this week. Before we get into all the details and what our thoughts are of this passing, I think we pretty much already got your answer. But Ben, maybe just a quick refresher to our viewers of what is the MORE Act and what's all involved in it.
Yeah, the MORE Act is the Marijuana Opportunity Reinvestment and Expungement Act. It is an act that would end the criminalization of cannabis by adults, for example. It would also remove it from the list of controlled substances. Right now, as most of our viewers know, cannabis is listed as Schedule 1, so it's on par with heroin, cocaine, amphetamines. It's really, for some reason, it shouldn't be there. I think most of us agree, and it would deschedule it from that and move it up to perhaps 3 or higher, which would also eliminate the need for IRS code 280E, which is what everybody wants, so that there could be further write-off of business expenses as well. So that's important. The MORE Act would also eliminate related criminal penalties and expunge felons who have been put in prison for cannabis-related acts that are nonviolent. So it would do a lot of that kind of stuff, and it basically overlaps a lot of what other acts have been introduced in Congress, especially Chuck Schumer's COA Act. So there's a lot of overlap there, and this is just one of those competing bills that is going to the Congress, going to the House again for a vote. It was originally passed in December 2020, and it wasn't acted on by the Senate Majority Leader at the time, and now it's going there again. So I sort of echo Michael's comments. I don't think it's really going to go anywhere at the present time. I don't think the market is really ready for an all encompassing act that takes care of all these things. I think incrementalism is going to be the way. And, then we have COA too. I mean, Chuck Schumer, that's really the competing act here, and that's going to get priority pretty clearly.
Well, Michael, we actually had Kyle Kazan from Glasshouse on a couple weeks back in our podcast, and he was mentioning about how in a lot of cases when bills are presented to Chuck Schumer, he knows 100% of the time that the bill is not going to pass. And we know that, but when we hear it from obviously people like yourselves, people like Kyle that are obviously well entrenched in this space, I got to ask, how disappointed or how surprised are you by this Democratic Party, knowing leading up to the election, it just seemed like all systems go for the industry, and it's just been a major disappointment in the first 15, 16 months of this administration? Like, what's some of the conversations that goes on within your company related to this whole topic?
Yeah, no, it is disappointing how slow this has evolved, but unfortunately, given that we live and breathe cannabis on a daily basis, we know everything takes a lot longer than you always initially expect. It's more complicated and it always costs more. So that's just working in cannabis through and through. I think from Schumer's perspective, I think he has to answer to his constituents and what he's ultimately indicated in terms of what he's going to be pushing for. So I think this COA bill will show that he's working towards them, so he secures his own job down the line from the progressives within this party. I think at that time when he feels that he's secure in his position, he's got the progressive party aligned with him, and that I think will be the point where he can say, you know something, I gave it my best shot. This is what I try to hear the will of the people, try to get something forward that they want, that addresses the wrongs. But then ultimately, I needed to pivot to something that actually we can get passed. And I got XYZ to be included in that passable bill. So I think there's going to be an evolution over the course of the next couple months. At least this is how I'm thinking about, hopefully over time, that we will get something that's actually passable. Because, yeah, like you said, I mean, he knows, with the discussion bill that he launched back in 2021, he knew he didn't have the votes. I'm guessing that's going to be probably a similar situation coming into April, where I don't know if he'll indicate that, but depending on what's in it, particularly there's some non-starters as relates to taxes that just will not work for the Republican Party. And if he comes in with that, then he's gonna do his job. He's represented his people, his constituents from the progressive side, but then ultimately he's going to have to come back to something that's actually much more passable. That's sort of how I'm thinking about the evolution of the bill over the next couple of months.
Ben, you want to add to that?
Yeah, it's a little bit unfortunate. It's a little bit unfortunate, Michael, that it almost seems like Chuck is aiming high, knowing that the bill is not going to pass. I think we all agree on that. All the analysts believe on that, sort of just to either, appease one side of his base or to set the bar high so that they can come in the middle later on down the line, right? And I think that's what's a little frustrating to people, knowing that this has basically no chance. It doesn't have the votes for it, as you mentioned earlier, but yet it's just sort of a power play for later on, whether, to get people on board so that it could, they could gravitate more towards the middle, if that makes sense. You know what I mean? And to appease the base in the process. So do you get frustrated by that at all? The politics going on here when pure logic is not really, making the day?
I get very frustrated because how politicized this has been, unfortunately. And, it just seems very, I'm not in politics, so it just seems very straightforward to me in terms of what ultimately has bipartisan support. And if we just get focused on what has bipartisan support, as opposed to all these conflicting bills and everybody trying to get their own thing together, it would be nice if they got focused. And if they were focused on what was actually passable, I think we can get something done. But it's just lack of focus, and everybody has their own priorities, whether it be, the job security or what have you, where they've made promises to their constituents and then they're just going to die on the sword as a result of it and ultimately get nothing done. They think that's a better outcome than ultimately compromising and get something that's passable. So that's what's really frustrating.
When I spoke to your CEO, Jim Cacioppo, back in December, he still felt very strongly that safe banking will get passed at some point in 2022. What's the sentiment around that internally with the company? Do you still feel strongly towards that? Should we have Jim on and call him on it?
I would say, I think it's maybe a 50-50 at best in terms of actually getting safe banking through. I think the next couple months are going to be very telling to see how things are proceeding. But the good thing is, our business is not dependent on safe banking. We're very much focused at the state level. We're very much focused in the states that we have highly concentrated positions, where we're trying to move the regulatory framework into a positive direction. And so much of our efforts are very much focused on our footprint in the states in which we operate, as opposed to the federal level, because we can't ultimately, at the end of the day, we can't control what happens at the federal level. So our heads are down. The investments we're making are very focused in the markets that we think have great growth opportunities in front of us. The markets like Pennsylvania and Virginia, we're making big investments in those markets. And we're seeing some positive regulatory developments in these markets. I don't know if you guys have caught, but they did 3 hearings in Pennsylvania as Senator Regan is taking a thoughtful approach to putting together an adult use piece of legislation in Pennsylvania by understanding what went right and what went wrong in all these other programs, whether it be Illinois or Massachusetts, to understand how best to put together this piece of legislation that worked for all. And we actually had 2 representatives from JUSH speak on the hearings, 2 separate hearings. So we're helping lead the charge on that effort.
Well, you mentioned a couple states. I want to focus on New Jersey. And there was a delayed pending cannabis recreational sales after finding medical shops that will be selling cannabis aren't quite ready to go. With New Jersey being next to Pennsylvania, which you operate in, what was your reaction to the news about the delay?
Well, I think it's unfortunate for the industry that it keeps on getting punted. I believe the next meeting is in the first or second week of May at this point that the decision may be made. What I would say about New Jersey as compared to Pennsylvania is the New Jersey just doesn't have the infrastructure that Pennsylvania has in place. It was a very early, infant kind of medical program that has developed over time. But compared to the nearly 160 operating retail stores, dispensaries in Pennsylvania, hundreds of thousands, if not into the millions of square feet of cultivation assets already online in Pennsylvania, they're completely different animals, those 2 markets. I think it will push, as that market develops, it will push Pennsylvania to make a move more quickly than not to make sure that they have a fully functioning adult use program. As the politicians, of course, are very well aware of the bleed that could occur from across state lines into markets like, right across from Philadelphia. So that's a big concern. It's a concern from tax revenue. It's a concern from jobs. Of course, there's a ton of infrastructure spend going into Pennsylvania in anticipation of adult use. We've seen a lot of supply come online in Pennsylvania over the last 12 months. It was a supply short market. Now it's more in balance, and folks are ramping up ahead of a potential adult use program in Pennsylvania as they take a very thoughtful approach with mapping that out. So,
encouraging.
From the industry perspective, it's unfortunate, but we'll just keep an eye on it. I think they've had, because they essentially in New Jersey has had an issue with the illicit market rearing its ugly head because it's taken so long for the adult use licensed dispensaries to come online. And that's what we're trying to prevent in markets like Virginia, where essentially it's been decriminalized, but there's no legal procurement of it within the state. So where do you go? Okay, I can possess and consume it, but I can't legally buy it in the state. So what am I going to the illicit market? Am I going to a neighboring state? People find a way.
You find a lot that happens right now. A lot of people crossing state, I would think.
Oh yeah. Yeah, so it's been estimated, like Virginia, which is it's a very early medical program. It just got kickstarted in late 2020. There's only, less than 10 operating stores across a population of 8.5 million people. The Virginia Bureau of Pharmacy has been slow to let patients into the system. There's a bit of a backlog. So it prevents a lot of folks just from getting into the system over time. We're working on trying to figure out how to help the Bureau of Pharmacy to alleviate some of these issues with getting folks into the system at this point in time. But for Virginia itself, it's been estimated to be a $1.8 billion market. So just from a size perspective, you can see the potential within a market like Virginia, and the legal market is just scratching at the surface from a market share opportunity.
Now, Michael, I know not too long ago, Virginia, they had some hearings that would potentially move up the date for adult use sales there, and that did not go through. That sort of failed. Were you involved at all? Was Jushi involved as a company to try to lobby for that? And what was your reaction to basically the status quo that adult use would be pushed back to, I believe, 2023?
Yeah. So we're heavily involved in the efforts from the transition from medical to adult use in both Virginia, as I mentioned, and as well as Pennsylvania. We sort of outpunch our weight class in terms of our involvement in these states because they have high concentrations of our portfolio based in Virginia and Pennsylvania. So it's something we actively lead the charge in among the MSOs that are involved in these states. In terms of it, the bill ultimately not being passed for the pull forward, I think it is disappointing in a way. But at the end of the day, we have the right to support HSA2 from a medical perspective. We're the only ones that can open up retail assets in HSA2. 2.5 million of the 8.5 million people in our specific region. I think it gives us an opportunity to really build out our portfolio, service the patient base. If you look at, and if you look at the straight numbers, so if you look at I would say an early medical program, you're looking at a 3% population penetration for a medical program. I think Pennsylvania is between 3 and 4%. Arizona was like 4%, north of 4% penetration. If you take the calculus, 3% of the 2.5 million people that are in HSA2. So this is the HSA region that Jushi has an exclusive right to operate in. You're looking at about 75,000 people.
75,000,
if you look at average spend across 75,000 just in HSA2. If you're taking a 3% penetration, if you apply average spend to that, which is about between $2,200 and $2,300 a year, you're looking at HSA2 alone as a $170 million market, medical. Not even adult use market, $170 million.
In a state that a lot of people don't even really talk about.
So that's what we
the
look
crazy
for.
thing.
Yeah. But, there's only 50,000 patients in the entire state of Virginia right now, but there's a 5-month backlog of patients trying to get their cards and get into the system. So
why is it backlogged so far? Just because of the demand?
So it's lack of systems, lack of processes. They're overwhelmed, and it's sort of. And honestly, whether it be Pennsylvania or Florida, when they first announced, a lot of it's like working in analog age versus digital. everything's mail in. It takes longer periods of time. They just don't have the resources to support it. So, but Florida and Florida and Pennsylvania ultimately switched to online platform that essentially you can get a card and you can get into a store within about 5 days. Compared to 5 months in Virginia right now. So we're working to see if we can kind of remediate that, which will be extremely helpful for all those involved in Virginia, be extremely helpful for patients so they can get the necessary medications that they need. So it's work that needs to be done just to help alleviate this massive backlog that exists in the state. But it presents a fantastic opportunity for Jushi and those other players within the state, given the lack of penetration of patients within the market today and what that looks forward. And we think, HSA2, nearly 30% of the total population is in this small, densely populated region in Northern Virginia, that ultimately we have 2 stores. We're going to be building out to 5 by the end of the year. We'll have 6 by the first quarter of 2023. And we have major expansion efforts to build out that 93,000 square foot facility in Virginia and Manassas to support not only those 6 stores that we plan on operating, but also
interesting to say the least. That's for sure. When I listen to you talk about all the positives, especially within the state of Virginia, I have to ask, being the executive vice president of investor relations, let's face it, we speak to a lot of investors within this space, and there is fatigue right now, a lot of fatigue, and a lot of it is based on legislation. But what are some of the questions that you're fielding on a day-to-day basis amongst your shareholder group? What's the common thing that you hear more often than, say, other things with some of the day-to-day feedback that you get from, like I said, shareholders?
Yeah, no, you're absolutely right. There is fatigue. I think a lot of the supporters have been in the space for quite some time, and they're sitting on losses, unfortunately. And it's been challenging to get new blood into the space because of the lack of the limitations, whether it be from custody issues or just from their compliance issues or lawyers don't allow. So we're dealing with this on a daily basis. So it's challenging because I feel like we're almost like in an echo chamber where we all see this fantastic opportunity. Others see this opportunity, but they can't play into the space. And all we can do is control what we can control, is just build out these businesses. Fundamentally, they're very sound businesses. And at one point, and it's not an if, it's a when the federal regulatory framework catches up, and ultimately will be like lighter fluid on the business later on. We're not dependent on that. We're positioning ourselves to be better for it. But that's how we look at it in terms of building out the business today. But I mean, from a questions perspective, I think it's really the focus for us is because of the trajectory and where we are in terms of our development is how are the assets coming along in these states,
which
that
are
we're
positive,
investing, tens of millions of dollars in. So yeah, very positive. I mean, there's no other MSO that has such a highly concentrated position in markets that are moving from medical to adult use.
Yeah.
I mean, Pennsylvania and Virginia. I think two of our largest markets, we have fantastic opportunity. I would also note that what's interesting, because we are 2 or 3 years behind some of the largest MSOs in the space, that they're contingent on the growth in the individual markets, and that's how their business will ultimately, grow over time. We have tremendous amounts of M&A opportunities in many of the markets that we're in because these are limited license markets, and some of the larger guys are already at max cap. So that presents a fantastic
Explain what that
opportunity,
means to my viewers,
inorganic
what you mean by that
opportunity
as
for
far
us
as
to grow.
max cap.
So we'll take a couple markets, for example. Illinois is one good example. So in Illinois, you can operate up to 10 retail dispensaries, and then there are 2 different types of cultivation licenses you can own. There's the big boy license, which you can add up to 210,000 square feet of canopy, and then they've recently released, on the process of releasing, craft grow licenses that are up to like 14,000 square feet of canopy apiece. So once you hit 10 stores in your operating in Illinois, you can't go out and buy more stores. If you're already operating a cultivation license, you're already potentially at max cap. You cannot add additional cultivation to what your existing operation is today. So today, Jushi, we have 4 operating stores in the state of Illinois. We have one license that we won through the social equity program that now is caught up in litigation, like all the other licenses are in Illinois. But we have the opportunity to add, through acquisition, 5 additional retail licenses. Because we are solely retail in Illinois, we also have the ability to add cultivation to become vertically integrated in the state, as well as, or even potentially go after some of the craft grow licenses.
So some of the tier ones are maxed out at 10 locations right now, and this is where you can expand.
Exactly. And that goes for whether it be Illinois, Ohio, Massachusetts. A lot of these markets already, the bigger guys are at max cap. So that leaves us from a very good negotiating perspective, because we're not competing against the largest guys in the industry for these specific assets. We're competing against smaller players, maybe less well-capitalized players, and that's why we're able to secure some of these really good valuations when purchasing these assets.
That's important, because there's a lot of investors that feel that once we do get some sort of legislation movement, it's just going to open the floodgates for the tier 1 MSOs just to come in and gobble everything up. But there's actual legal framework in place that still has tier 2 type companies to further expand, is what I'm understanding, correct?
Exactly. And I think we have a full-time PE type of group embedded within Jushi. This is all that they do. They do due diligence on these acquisitions, they execute, and then ultimately we close on these acquisitions. So we think our department, our business development team, led by Oliver Bleckner, is second to none in the industry, and they have a fantastic opportunity in front of themselves, and it's something that we're going to make sure that we're taking advantage of. I'd also note that we are a really good counterparty for sometimes when consolidation occurs in the industry.
Yeah.
And for instance, like the Cresco Columbia Care deal, one of the main things that have been identified in that deal is the fact that they have a lot of overlap.
So how does that work then?
Within many of the markets that they compete in, and ultimately they're going to have to.
So if I walk in, I've got 10 locations, and I want to buy out, let's say, Jushi, and I'm a tier 1 MSO, and you've got 8 locations, let's say, in Illinois. I then have to divest 8 of those locations. Am I understanding that correctly?
Yeah, so for Illinois example, so say Cresco owns 10, Columbia Care owns 5, they're going to need to divest 5 locations. Ohio, the same deal. You can only operate 5 retail locations in Ohio. If they're above the max cap, which they are on a pro forma basis, they're going to need to divest those assets. Massachusetts, same story. You're only allowed 3 adult use stores in Massachusetts. If the combined business, which it does, owns more than 3 licenses, they're going to have to divest those licenses. So that puts us in a really good position. We have great relationships with the Crescos of the world, and ultimately we've proven out to be a fantastic counterparty. We did that with when Cureleaf and Grassroots got together. There were some assets that needed to divest. We picked up a fantastic asset in Ohio, a grow, for $5 million, which was essentially the cost of the build out of that building. So there's a lot of bad counterparties within this industry. Yeah, that's one thing that
you guys have done. It's been very timely with your acquisitions. Sorry, what were you going to say, Ben?
Yeah, so there's a lot of capacity for growth going forward, which is great. I wanted to sort of shift focus and ask you a question about the current, and that is your Q4 2022 earnings, which you reported quite recently. The revenue came in basically in line with the 4 analyst estimate. Adjusted gross profits were down a little bit to 40% from 45.1, I believe it was in Q3. And I think overall there might have been a little bit of softness in the market that we've been seeing in the earnings picture with some of the big tier 1 MSOs like Cureleaf and AYR and so forth. So I want to get your take on what your earnings were. I know you still grew 22%, which is higher than most of your tier 1 competitors. But overall, like, what did you think of earnings, your earnings in Q4? And do you think that the softness that we're seeing, not just with Jushi, but across the quarter, across the industry, is that transitory? Is that something that you think is going to shift back to a normal growth profile in, say, Q2 or Q3 of this year?
Yeah, so it's a great question. So yeah, like I said, we performed quite well on the top line, growing 22%, about $66 million in revenue. GP EBITDA was lower than initially expected. We did make specific investments in the business, given the growth profile that we expect to happen over the next coming quarters as we continue to build out this business. So given how tight the labor market is today, we were very opportunistic in securing very, very talented individuals to bring them in ahead of the expansion of many of, whether it be the retail expansion or potentially what's even bigger for us in 2022 is the wholesale expansion, the build out of our grower processor facilities into 2022. So, but at the same time, so markets like Pennsylvania and Illinois, we did experience some price compression. Those markets had been short product for quite some time. There's been additional cultivation capacity coming online. Pennsylvania is a perfect example. A lot of folks are ramping up in anticipation of adult use. So we went from a flower short market to essentially a market that's more normal, in line. It was lack of capacity, and it's not easy to grow good product in Pennsylvania. And there's a lot of, Pennsylvania has regulatory framework that has certain, I say, lack of remediation efforts that allow us to essentially remediate product, which ultimately does not allow us to put certain product into the system. Essentially, we have to destroy the product. That's incremental costs. There are hurdles that we need to jump through in a market like Pennsylvania,
right? That
makes it a little bit more expensive to operate, and as a result, you have some leakage of product as a result. So a lot of folks have invested in Pennsylvania, so you've had a lot of increased cultivation capacity. So the pricing was very, very high. Now it's more in balance in Pennsylvania. But because Jushi is so retail focused, we don't have the luxury, not yet, but we will, to be able to sell our own product through the existing 18 stores that we operate in today. So we're just scratching the surface as we build out our vertically integrated business in Pennsylvania. That's an opportunity for us. We are also working with our third-party vendors to make sure that as wholesale, as the pricing comes down at the retail level, we need to make sure that we're getting better pricing at the wholesale level. And that's an initiative that the team took on in Q4, Q1 to make sure we're able to essentially pass those savings along to the customers as opposed to eating that margin ourselves. So that's something that's going to be a big, big mover for us.
Can you imagine? Do you guys fantasize the day that you can actually sell product across state lines? All this goes away.
Well, it's interesting. I think that's not going to happen probably anytime soon. I think given the headaches that we're going through at this point in time, just to get something simple passed, full-on interstate commerce is not in the next. I don't believe it's in the next 5 years. Honestly, I think we'll ultimately work our way up to that. But the states are going to be cognizant of what's already been put into the infrastructure within their own boundaries, that they're going to be protective of the employment base, the tax dollars, all the infrastructure spend that's already been in those specific markets. So I still think it's going to be managed at the state level for quite some time. And then down the road, whether it be between 5 and 10 years, we'll see it start opening up. Like for instance, Schumer's bill was like more of an opt-in, opt-out policy. He was saying, all right, if you guys want to participate interstate, you have to opt in, but you're not obligated.
It's crazy when you think of how much this industry's grown, but yet all the loopholes, that you have to jump through and everything you just explained. But one thing's for sure, it doesn't matter how challenging this is, it still remains such a very, very attractive industry that people just can't consume enough information about it. The interest level, even though through the tough times it's still very much there. And I think a lot of it has to do with the fact that if and when legislation does move, we haven't seen the brightest days of this industry yet, don't you think?
Absolutely not. I think I think across the entire sector, we're very early innings. Jushi is even earlier evenings because we're still very much in that trajectory of building out the portfolio. So we look forward to continuing to execute on our plans to make this a more balanced business between retail and wholesale, be able to garner some of the margins that we see our peers having as a more vertically integrated business over time. That's something that we're keen on. we don't manage the business on a quarter-to-quarter perspective. We're
Yeah.
looking at the long-term potential of this business. We'll make investments. We'll pull forward investments to make sure we're doing everything right off the bat. And that's how Jim looks at the business, more like a PE kind of mentality, as opposed to making sure you're hitting everything quarter to quarter to quarter to quarter.
Michael Perlman from Jushi, Ben Smith from obviously our lead financial writer, the TD from the Dales Report, excuse me. Get your popcorn ready, gents. We've got a MORAC vote coming up later this week, but I appreciate both of you checking in midweek this week.
Great. Thanks for having me.
Thanks, Michael.
Guys.
Thanks, Ben.
Appreciate it.
Hey, everyone. Thanks for watching. We appreciate you giving this video a thumbs up. We also value your feedback, so leave a comment below. And if you like what we do, then share this video on your socials. And don't forget to subscribe to our YouTube channel and tap on that bell to receive notifications for all future videos that we post. Thanks for watching.